Well, guys, they did it. As suspected, they made the move over the weekend. Late last week, Trump put out a statement that he was going to make a decision regarding the US involvement in the Iran-Israel war within 2 weeks. And Captain Can't Listen Properly started tweeting and making YouTube content stating that he said he would make a decision in 2 weeks. On that day, I tweeted that within is not the same as in, and it was this widespread misunderstanding that had me stick to my conviction that I warned you about on this video on Thursday, that something would happen within 96 hours. And now here we are. Within those 96 hours, US did in fact involve itself, and I hope you guys were prepared for this. Now, if you watch this channel, you were prepared, and that deserves a quick little like. If you're new here, my name is Annie, and this is Trade Travel Chill. And no, we don't get it right all the time. No trader does, but we get it pretty close more often than not. So for that reason, you're going to want to hit that subscribe button for the sake of your portfolio. So great, that's happened. What's next? That's exactly what I'm going to go through in this video. And in order to draw a conclusion on what to expect next, we need to know the verified facts of the past 24 hours, how crypto has responded, being the only market open for trading on weekends, and finally, consider the broader geopolitical outlook and what it could mean for market stability and opportunity heading into the new week. So let's begin by establishing what has transpired in the past 24 hours or so. The situation escalated dramatically with the United States conducting airstrikes on 3 Iranian nuclear facilities. Trump described these operations as very successful, asserting that they completely and totally obliterated Iran's key nuclear enrichment capabilities. US officials confirmed the deployment of B-2 stealth bombers and bunker buster bombs for the first time in combat, alongside submarine-launched Tomahawk cruise missiles. What this means is we've now shifted from the narrative of this being a proxy war to direct US military engagement. Now, on my Sunday video, I noted to you some of the things to look out for as hints of escalation, and this was one of them. After that, it was time to see how Iran would react, and they did indeed react. They launched a new wave of missiles towards Israel, triggering sirens across central and northern areas, including Tel Aviv and Haifa. Israeli Defense Forces reported intercepting these projectiles, but some impacts were confirmed, resulting in damage to structures and causing at least 25 injuries, still counting at this point in time. Now, from a strategic standpoint, this is undeniably a significant escalation. The US directly targeting nuclear facilities conveys a clear objective to disrupt or dismantle Iran's nuclear program. Despite this, Iran's nuclear agency asserted that its work would not be stopped, and Israeli Prime Minister Benjamin Netanyahu has maintained that Israel's military operation would persist for as long as it takes to address the perceived existential threat. Iran's foreign minister condemned the US attacks as a grave violation of the UN Charter and international law, warning of everlasting consequences. UN Secretary General expressed grave alarm at the US use of force, labeling it a dangerous escalation and a direct threat to international peace and security, while urging de-escalation. Even the Palestinian armed group Hamas condemned the US aggression as a dangerous escalation. Notably, the Houthi official indicated their response to the US actions could involve targeting US ships in the Red Sea. So international appeals for de-escalation are prevalent, but the immediate trajectory appears to lean towards further confrontation, raising significant concerns for regional and global stability. Now let's turn our attention to how these geopolitical developments immediately influence the markets, specifically the cryptocurrency space. While traditional global markets largely remain closed for the weekend, the digital asset markets operate 24/7, and they were immediately reactive. Bitcoin, for instance, experienced a sharp decline, briefly moving below the 101,000 level shortly after the news of the US airstrikes broke. And many major altcoins followed suit, trading at levels not seen in over 2 months. So I'm currently on a very small time frame. And as you can see, I've left these levels of liquidity here to show you what's being wiped out as the price moves down. When we got first word of the US involvement, that was this move down through here. And that means that all of these liquidity levels here are now taken. Now, we do still have liquidity below price, and this was into the area that I've been talking about on a higher time frame on this channel for quite some time of us having a good chance of the price revisiting. So now that I'm on the daily time frame, you can see that here that this major liquidation zone sits between about 99,000 to 100,250. I also noted the other day that we don't want to see Bitcoin break the 50 EMA on the daily time frame if we're going to be safe. Bitcoin has now had a daily close below the 50 EMA. So it's definitely an area to de-risk for now because things could get a lot worse. However, we do need to see what happens when we get into, or if we get into, this major liquidation zone. Now that we're getting fairly close to it and we've had this big move over the weekend to the downside, it's a good time for me to refresh the liquidity to see if we've had a new build up. So now when we have a look at that, you can see here we still have the highest level here, right? This is the brightest zone that is closest to price, and that makes it our immediate zone of attention. If we hold it, look, we've also got a very bright area to the upside. So on the presence of good news, there could be a higher high coming at some point in time. But the question that we're really asking ourselves is there more downside to come before upside, or is that liquidity up there going to be taken and the cycle's over? So for me right now, I'm waiting to see what happens in this major liquidation zone. If we break below it, then the next area is going to be around the daily time frame 200 EMA. And that's between about 92 to 95.5 at this point in time. That still wouldn't be a huge concern, although we don't really want to see Bitcoin drop that far. Now, if we do start to head down towards the daily time frame 200 EMA, the thing that we really need to avoid if we're to have continued bull market is a break of the weekly time frame 50 EMA. That's currently sitting at about 85.5k. Now, obviously that's going to change as new candles form, but you can see in this cycle so far that the weekly time frame 50 EMA has held as support on every pullback so far. So we really don't want to see us break below that, but that is a really far away price. So it's not my immediate focus. Like I mentioned to you, my immediate focus is this daily liquidity here that we're about to enter into. And probably by the time this video is out, we may have taken it. I don't know. But if we do take it and we're closed below it and there's no strong bounce out of it, then we have to start looking to the next level between 92 to 95.5. Now, in times of such heightened volatility and uncertainty, having access to real-time information and collaborative analysis is invaluable. Our TTC community was actively processing these developments as they unfolded, sharing insights and helping each other interpret the rapidly changing landscape. So if you're looking to navigate these complex market conditions with informed perspectives, joining TTC offers a significant advantage. We provide a platform for continuous updates and shared understanding, which is more critical now than ever. If you want to consider a TTC membership, which gives you access to all of our courses, our live updates, and our community, as well as our custom indicators, the link is in the description of this video. Let's consider the less favorable outcomes this conflict could take if the situation escalates further, because it appears unlikely that Iran will simply back down. The US has sent a powerful message, with Trump stating Iran's key nuclear enrichment facilities have been completely and totally obliterated, adding, there will either be peace or there will be tragedy for Iran. However, Iran's foreign ministry has responded back stating the Islamic Republic of Iran considers its right to stand with all its might against US military aggression and to defend the security and national interests of Iran. This suggests a firm intention to resist and respond rather than capitulate. So, with that in mind, let's go through the worst case scenario. As I'm filming this, the price of Bitcoin seems to be dramatically dropping. By the time it comes out, who knows where the price is going to be. The best thing I can do in advance is to warn you of these liquidation levels. Now that we've broken the daily 50 EMA, it's not good. We definitely need to reclaim that when the week opens. There's a very high chance that we could come into my first liquidation level, and if we break through it, the second is not off the cards at this point in time. Now, if you're watching this video, I bet you're having a look at this level down here where the highest level of liquidity is, and you're probably wondering why I'm not talking about it. Yes, it's absolutely a concern if things continue to escalate. That level is between 81.7 to 87.7. The other thing about that level is it lines up currently with the weekly timeframe 50 EMA. Now, the reason why I'm not talking about it is because I've said this on my last video, I would not hold through a pullback that deep. For me, I wanted to de-risk if the price broke the daily timeframe 50 EMA. So I have done that. I've de-risked on a lot of my alts. I've been doing that anyway since January. You guys know that. But your alts are basically going to get decimated if this continues to the downside. Look here, with the Bitcoin price dropping, the Bitcoin dominance is spiking massively and it's heading towards my prior target between 67 to about 71, I think it was 72. This is a higher high on the Bitcoin dominance. It's not positive. And look at this here. When you have the Bitcoin dominance increasing, but the Bitcoin price decreasing, your alts majorly get destroyed. It's really not worth it right now. I mean, unless, of course, you're taking short positions, then it's fine for the purpose of trading. There'll be some huge trades there. But for holding alts, I just don't quite understand why anyone would be long-term bullish on alts with this type of price action going on. We've now also broken this flag on the total. And previously I was telling you we don't want to go below this low. We have well and truly done that now. So this is not great. We could be heading back down to the prior low. So like I said, if you're trading short positions on altcoins right now, you're probably going to have massive percentage gains and it's fine. But if you're holding altcoin spot, you really need to think about what to do next. I don't believe in selling on a red candle. I don't think you should panic out. There is always a relief bounce after a big dramatic move. And on the relief bounce is where you should make your decision about what you want to do with spot alts that you're currently holding if they're not performing to your expectation. And that's why I've been screaming since the beginning of this year that this is a trader's market. It's not a hodler's market. And so if you're seeking a platform to navigate these price movements, BitGet is a crypto exchange I trade on, and they're currently offering a new promotion just for you guys that watch this channel. If you join BitGet using the link in the description of this video, you can join this campaign here and there's loads of rewards for completing different tasks. This runs until July 15. And all you really need to do is register using the link in the description of the video, make your first deposit, and then get your first trade reward. For full terms and conditions, you can see the link in the description of this video. Beyond the crypto markets, it's important to consider that traditional stock markets have not yet had the opportunity to price in these significant geopolitical developments. When other markets open this week, we need to be keeping a close eye on how they open in order to get a heads up on the next move for crypto also. The reaction of these broader financial markets will be crucial. So let's take a quick look at how they actually closed this week. Looking at S&P, it's still in my area of interest. It's been in here for so long, but I have been saying to you that we need to see how it reacts now out of it. So we're really just consolidating. We haven't had the move down, but if we have a bad reaction when the market's open, it might get us finally that closure underneath our area of interest. And if it does, that's going to create a lower low in comparison to this move up here, and that's when we would start to expect a pullback. So right now it's neutral. We're still waiting to get a bearish close below in order to turn bearish on the S&P for now. The same thing applies with the Nasdaq. It's just consolidating within the zone. That makes us neutral. There's nothing else we can be. In order for us to turn bearish, we need a closure below. In order for us to become bullish, we need to move out into the upside. Whilst it's consolidating, there's no actual conclusion that we can draw on it. But I do think that the open this week will give us a very clear indication of what it wants to do next. Crude oil was basically consolidating at around 71, another important one to watch when the market opens. And gold is also still in the formation that I've mentioned on previous videos, creating this ascending triangle and holding above the 50 EMA. Now, on top of that, the weekend move in crypto has now left us with a CME gap. And whilst gaps don't have to fill, the stats show that when they form over the weekend, around 80% of them do get closed, usually within the following 4 to 8 days. So we don't exactly use the CME gaps in the TBD system, which is the trading strategy that we trade on this channel, but we do use something that is called the US settle price. And that's basically where the last 15-minute candle closed at the closing of US session on Friday. So that's this candle right here in the gray box. And that's sitting at around 103.5 kind of area. So when we eventually do get our hint of a reversal, which will be a short-term relief, that's going to be an area that we're going to look for to see if we return to it. When I zoom out to the 1 hour time frame, I just want to show you quickly how the levels are playing out so far. So this here was the 3 hits to the high. This is a reversal formation. We caught this inside of TTC. I've been short ever since. I think some of the community is still short off that. Others have been shorting throughout. But following that, this is our level 1 drop through here. That went into the weekend of last weekend. We had our retracement. The level 2 drop has happened through here. We had a bit of a fake move on Friday that kind of tricked a lot of people, made me a bit uncertain, I'm not going to lie. Wasn't trading this. Like I said, my position was entered up here, so I don't need to look for new positions. But that was a bit tricky, and it was a typical Friday trap. And now we're in the process of completing potentially the level 3 drop. You can see that is tagged right on my liquidation level exactly. As I'm filming this video, this is actually unfolding. So we need to see here now, if we enter this zone, is that where we get a reversal signal? That's only going to happen on small time frames. And again, like I said, it doesn't necessarily mean reversal back to all-time highs. It could just mean short-term relief as the market maker takes out the late shorters. Now, one thing we can do is have a look at how much leverage is coming in as this move happens to the downside. And we can see here we've got a big cluster all the way down to about 96K. The highest levels are still in my major liquidation area. Above price, basically what that is telling you is that here throughout the weekend, traders were opening new short positions. Now, when you count the levels according to this method, that right there is the perfect example of late shorters. Intelligent traders short at level 1, retail gets in on confirmation at level 2, late traders get in at level 3, and that's usually when the market tends to turn. Now, I'm not saying level 3 is finished yet. That's what we're waiting for next. We can identify that we're in level 3. We need to wait until it's finished before we start looking for reversals. And what we monitor at this level is how the delta is forming between longs and shorts. So that's another thing that we can add. And you can see here currently we are 17.6 billion to the shorts. And you can see how that's been growing over time. We were minus 11 here last weekend, minus 14 yesterday, minus 17 today. So that shows you that shorts are piling in right now. And all of these things give you a higher probability of a reversal when the market opens. And so that is where you start to look to lower time frames for hints that that reversal is coming in soon. It's not coming in on this candle. You would need to go down to 15, 5-minute time frame. You're looking for a railroad track. You're looking for a stopping volume candle. You're looking for some sort of hint that the buyers are stepping in now that we've hit this level. If it doesn't happen exactly here, you're looking for the exact same thing within this zone. So in order for us to get that reversal pattern, we have to consider a more optimistic outcome, even though right now that is less probable. And the question we need to ask ourselves if we want to remain positive that this won't escalate too much further is the situation truly a precursor to a global conflict like World War III? For that to happen, we would most likely need direct military involvement from major global powers like China and Russia. But that's highly improbable for several strategic reasons. While China has substantial energy interests in the Middle East, direct military engagement does not align with its overarching foreign policy, which prioritizes economic stability and avoids direct confrontation with the United States. As Dr. Clemens Shea from the National University of Singapore commented, beyond the perfunctory statements and calls by Chinese officials, it is unlikely Beijing will stick its hand in, certainly not military, in the ongoing tit-for-tat strikes between Iran and Israel. Some analysts suggest that a US preoccupation in the Middle East might even strategically benefit China by diverting Washington's attention from the Asia-Pacific. And Russia's primary strategic focus remains the ongoing conflict in Ukraine. Direct military intervention in the Middle East would strain its resources and risk a direct confrontation with the US, a scenario major powers typically seek to avoid. Their approach is more likely to involve diplomatic support for Iran and condemnation of US-Israeli actions rather than direct military participation. Therefore, the likelihood of this conflict immediately escalating into a broader global war involving these major powers remains low. And so, if this specific conflict does not escalate further and we start to see some form of de-escalation, we could potentially see some measure of relief in the broader markets. And for that, we will see it in the charts before we hear it in the news. And so what I've spoken about earlier is what you need to be looking out for this week. And here's the thing, unlike traditional financial markets with defined trading hours, cryptocurrencies are always active. And that's why when war escalates over a weekend, we see the reaction in crypto immediately. Because we have 24/7 markets, it means that crypto is the first market to price in significant geopolitical risk. But it also leaves us open to overreaction with sudden movements caused by panic and fear. And the issue with that is the full ramifications for oil, equities, and traditional safe havens like gold have not yet become apparent, and they won't until conventional markets open this week. And that means if they react negatively when the market opens this week, crypto will also see further downside as a result. But here's the good news. As I've just shown you, markets are based on liquidity. So once large levels of liquidity are taken, we often see relief follow. And that's why we focus so heavily on liquidity on this channel. And that's why our targets are more often than not highly accurate. So you need to know the news in order to understand retail sentiment. But once you know it, you have to block that out and just trade what you see. You have to learn the pattern, the timing, the levels, and understand liquidity like your life depends on it. And once you truly grasp that, you'll stop getting spooked by the market. Now, crypto reacted first because the escalation happened over a weekend, and therefore it was the only market that could react. It's likely that when the recovery starts, crypto will lead it as well. So if you need help identifying when that happens, check out our memberships with the link in the description of this video.